Assalamu alaikum. This is Baseeth with you, Mohammed Baseeth from Maas Financial Consultancy. I will be taking this session today. As the topic goes, we are going to see fixed asset management and depreciation in Tally Prime. I am connecting from my home, so apologies in advance for any disturbance in the network. I hope everyone can able to hear my voice properly. If you have any issues with that, please you can let us know in the chat, or you have the Q&A section where you can let us know there as well. Okay. Once again, so the topic today is going to be on fixed assets, and we are going to see fixed asset in general, and we are going to see also how we manage these fixed assets in Tally Prime. In my experience, from what I have come across, fixed asset is something is not paid very much attention in small and medium-sized companies, especially in smaller and micro companies. In medium and big enterprises, they they manage their assets with standalone software. In terms of managing your vehicles, managing your plants and all. But in small companies, we don't really see that much often. But recent days, there has been a change where everybody is interested in managing their fixed asset, and especially in terms of depreciation. So on this session today, we will see what is fixed asset. We will see how we can qualify as an expenses as an asset. And then we will see the rate of depreciation, like normally accepted rates. And then we will see also how we make these assets in Tally and how we create depreciation in Tally. So what is fixed asset? So any expenses that you incur and you purchase equipment in return, let's say a car or a computer or a furniture, we tend to call that a fixed asset. There are some certain things that we have to qualify in order to consider those things as a fixed asset. So first one is whether we are buying this for reselling or for our own use. Let's say you are a normal trading company, you deal with or a contracting company, you deal with construction of building and all, and you purchase furnitures for your office. So in this case, the purchases of furnitures, you are not going to sell it again to your customer to make profit. That is going to be for your internal use. So you are not purchasing for resale. So this is going to be the first option, not for sale. If you are a company which is dealing with buying and selling of furniture, in that case, that furniture will be considered as a stock item instead of a fixed asset. So that is the difference there. It should not be for sale. That should not be the main stock of your business. So if you're a computer shop and you're buying and selling computer that you purchase for the intention to resell will not be considered as an asset. If you're a car company, you are purchasing a car and then selling the car, those cars will not be considered as an asset. But if you have a car which is you are using it, right? That is the second point. So either it's being used in full or partially for your business, right? So again, going back to the furniture store example, if you have a furniture store and you have a sofa and some desk for your office, so that is being used for your business. So that will be considered as an asset in that case, right? So an asset should be either used in full to the business benefit or partially to the business benefit. And then it has to have a value beyond one period. One period in the sense more than one financial year. So typically financial year in Saudi is from January to December. So if you are buying something where the value will be consumed within that year, right? So it is not going to be considered as a fixed asset. Now, to give you an example, let's say you purchase a printer, right? So the printer, you are going to get benefit at least for 3 or 4 or 5 years, right? Whereas the toner you buy for that printer will get consumed within a year, right? So that is how you can able to differentiate between expenses and an asset. So in terms of a car, let's say you have a vehicle and you have purchased some, excuse me. Yeah. So let's say you have purchased a vehicle, right? Let's say you have a car, and time to time you do maintenance on that car, right? So the maintenance, let's say such as oil change, tire change, right? Any repairs you made, the value is going to be consumed within that year, right? Oil change maximum 3 or 4 months, or even some cases 1 month. So the value will be consumed within that financial year, will not be considered as an asset. So it has to be more than a year, more than one period. And then the ownership of that specific asset that you purchase should be on the business, right? So we purchased car under the business name, then it will be considered as a business. If you purchase a asset in some other name, like let's say the owner's name, or owner's excuse me, or some relative of the owner, or some other company's asset, that will not be considered as a asset to our company. So once again, to repeat, how do you qualify an asset as a fixed asset? It should not be for resale. You should not have a intention to resell the asset for profit, right? And then it should be used either fully for the business or at least partially for the business. It should have value beyond 1 year, one period, at least one financial year. And then the ownership of that specific asset should be with the business. Now, once we have these assets, right? So the reason why we are treating this as a fixed asset is that if we treat them as expenses, it is going to deduct from our P&L all at once, right? So for example, let's say we buy a car, and let's say the car value is 60,000 riyal, and the car is going to give us a benefit for, let's say, next 5 years. So we want to gradually deduct this fixed asset and deduct an amount from that 60,000 every year, right? Because we are using this asset for 5 years, so we are going to deduct this partial value from every year from our P&L. So if we deduct all at once, so 1 year we will have a lesser profit, and then the subsequent year, subsequent period, we will have more profits. So we don't want to do that. We want to spread across multiple financial years. So for that purpose, the depreciation come into play. Now, for depreciation, there are different rates. So IFRS suggests that we should have to have a policy stating that, because these are the different assets we have, and these are the depreciation rate that we are going to adopt. So these are like general guidelines. So you can have a different depreciation other than what you are seeing in the screen, but these are generally accepted. So here, for example, fixed building 5%. Some in some cases there will be from 5 to 10. In some cases 7%, 8%, depends on that specific use of that asset. And then here you have industrial and agricultural movable buildings. In this case, like movable, any kind of building which you can relocate. So that would be 10%. Other things such as machinery, equipments, computers, any softwares that you purchases, any car, any vehicle that you use for your transportation of goods, that is around 25%. So like that, these are the different rates with which you can able to deduct on a yearly basis from that asset. Now, moving forward, every year we can able to reduce this certain amount, like let's say 5% or 10% from the asset, and we can able to allocate it to multiple periods. You can also, as per zakat guidelines, you can able to use a written down value method as well as straight line method. Both are acceptable, and you can able to write off in that write off a specific asset depends on that both the methods as well, right? So these are the rates of depreciation with which we can deduct the asset value throughout the period. Now we will see also down the line how this can be entered in Tally. Now there are some frequently asked questions on fixed assets, right? So when to calculate depreciation entry? I just want to take a moment here. If I hope everyone can able to hear me, and uh, Yeah. So I hope everyone can able to hear me properly. If you are having any issues, please use the chat option or Q&A option to raise your questions. Thank you. Yeah. Okay. So the FAQs on fixed asset, which is normally asked question, which are when to calculate depreciation entry. So in this case, depreciation is calculated in some cases yearly, right? In some cases half yearly, monthly, or in some cases quarterly also. So depends on how you want to see your P&L, right? So let's say you want to see month-wise P&L. That is something very important to you, and you want to make sure that all the expenses for the month is being accounted, right? So in that case, you can go with the monthly depreciation. If you are someone who concerned about quarterly P&L, right, then you can go for a quarterly depreciation method. So what is monthly, quarterly, half yearly, and these things are? So now we saw an asset, and then we saw also how much percentage of depreciation that we can depreciate an asset, right? So that is one for an year. So for example, let's say you have an asset, and you have to have a depreciation of approximately 25%, right? So let's say if you purchase for 100,000, you have to give a depreciation of 25,000 for the first year. So in this case, the 25,000 real can be split into 12 if you want to go for monthly, or it can be split into 4 ways if you want to go for quarterly, or 2 if you want to do for half yearly. So we can able to split this amount and make this depreciation entry on a month-on-month basis, or a 3 months once basis, or 6 month one basis. So the key point here would be depends on your wish to see whether monthly P&L or quarterly P&L or half yearly P&L. Now, the second question: what type of depreciation method should I use? So as we saw before, you can able to use both written down value method, which is WDV, as well as straight line method. So you can come up with a lifetime for an asset, and then divide the total value by the number of years that you are going to use, and then depreciate and write off. Or you can simply go by the straight line method also. So both depreciation methods are acceptable by ZCA. The third question would be to how to decide on the lifetime of the asset or depreciation percentage. So in this case, for lifetime, which we saw before, lifetime is basically depends on your interpretation only. So let's say you buy a car and you are saying that I'm going to use this car for 5 years and then I'm going to sell. So in that case, you can take the lifetime as 5. Let's say you buy a computer and you are saying that I'm going to use this for the next 3 years. In that case, that will be for the lifetime will be for 3 years. So if I purchased a laptop for 3,000 real and the lifetime is 3 years, so our depreciation rate is going to be 1,000 real per month. So that is how I can come about lifetime of the asset. For depreciation percentage, as I have seen before, you have a general guidelines on what would be the depreciation percentage. You have to develop your own company policy. Either you can follow this depreciation rates, or you can come up with your own depreciation rate as well. So that is how you can decide whether on a lifetime or on a depreciation percentage. Now, intangible fixed asset. So we intangible in the sense that we cannot see an asset that we are not able to see. This is mainly such as goodwill. These kind of things are considered as an intangible fixed asset. In most cases, we don't see that here in practically being used. But if you are having an intangible fixed asset, that also considered as a normal asset, and then we have a depreciation for that as well, which we write off over a period of time. Now, the next question, amortization, is related to this intangible fixed asset only. For an asset that you can see, we call the writing of process as depreciation. So every month we depreciate a specific value on the asset. For that, it would be like any asset that you can able to see is depreciation. Any asset which you cannot see, which we write off, is that process is called amortization. So that is how the amortization is linked with the intangible fixed asset. And the sixth point would be when should a fixed asset be recognized? So again, this we saw on the first slide. It has to fulfill this option. It should not be for resale. It should not be for. It should be used for more than one period, right? So in these cases, if any expenses or any asset you purchase, if you want to ask the question, okay, whether this is considered as an asset or not, you can always rely on that first slide, whether with that 4 points, whether it is for sale, whether we have value beyond 1 year, whether we have the ownership, and then lastly, whether we are going to use this asset fully for ourselves or at least for partially. So that is how you can recognize an asset. And the seventh is, when can a fixed asset be written off? So eventually, you have two process. One is called sale. You can able to write off an asset when you actually sell the asset. Let's say you have a car you purchase, you used for 5 years, you have depreciated all its value. Now you can able to sell the car and you can make profit. That would be profit on sale of fixed asset. That is called considered as an indirect income. As well as if that asset become like if you're not able to sell it, if you want to write off from the book, that will be called a disposal, where you will get rid of the asset with a disposable entry, right? So that would be that covers our fixed asset questions on frequently asked questions on our fixed assets. Now we will see how in Tally we can able to manage this depreciation process. So we have both manual depreciation as well as automatic depreciation, Tally Prime aided depreciation available in Tally Prime. So manual depreciation would be, I recommend for any companies with less than 10 assets, we can do manual. If you have more than 10 assets, or you have like 10, 50, 60, 100 numbers of assets, having an auto depreciation module will benefit you in a greater way. Now we will see in Tally how we can do this part. So here is a demo data that I have. So here I have created some fixed asset here. So from here you can see this is the fixed asset. These are the groups I have created, and then there are assets under each group. So for under computers and printers, we have a fixed asset called computers and printers, and accumulated depreciation for computer and printer. And for here furnitures, we have the same asset and then the accumulated depreciation as well. And then here we have some machinery, for that as well we have accumulated depreciation here, and then some cars we have, for that also we have one accumulated depreciation. Apart from this, we have a expense account for depreciation expenses, right? So these are the ledgers that I have created: depreciation expenses under indirect expenses, and then asset and accumulated depreciation under the fixed asset group. So this is what I have created. Now in Tally, you have a report. Go to display, analysis and verification, data analysis. Here you have something called fixed asset analysis. Now here you can able to see your opening balances, your additions, deletions, and then the closing balances. Deletion in the sense, both if you have got rid of any asset by sale or disposal, or if you have given a depreciation, that will be appearing on the deletion side. Opening balance is what the value we have brought forward from the previous period. Closing balance is after depreciation. So here we can able to see that. Now in this area also we can able to see whether if there is any additions with more than 180 or less than 180. So there is a thing like if you have more than 180 days or less than 180 days of use of an asset, you can give half of the rate of depreciation. Let's say you purchased a 25%, you purchased a car, the depreciation rate is 25%, right? If you have used for less than 6 months, you can able to give 12.5% for depreciation for that specific vehicle. So that option is also there. Based on the addition, it is going to show you whether you have an asset for more than 180 or less than 180. So this is this report you have in the default tally itself. Once again, how to go to this report? You can simply click on go to here, search for fixed asset analysis. It will take you there. If you want to navigate through menu, display, analysis and verification, data analysis, and then fixed asset analysis. Okay, so this is how you can get this fixed asset analysis report. Now let's see the process of depreciation. Okay. So let me open the trial balance here. So these are the asset I have. Now this is my balance of fixed asset. Now for this asset, I'm going to give a 25% depreciation. So what I have done is I made one single entry for the whole year, right? So this is the depreciation entry that I made. So here you can see the depreciation expenses is at 154,000 real 500, and I'm crediting the accumulated depreciation account. You have two options. You can either directly select the asset itself. For example, I can directly select furniture and fixture as well, where it will reduce the value from the asset itself. Or you can also create this accumulated depreciation ledger under the same group as fixed asset, right? And then put it on the credit side. So here the benefit you will get is you can able to still see the opening value of that specific asset as well as the depreciation value. If you directly credit the asset, the value will go down every year. You won't be able to find out the original value. You have to go back to the starting time to find out the original value. In this case, the original value will be there on the debit side. On the credit side, the depreciations will be there, right? So this is how you can make the depreciation entry manually. Debit depreciation, credit the accumulated depreciation for each and individual group of asset, right? So this I have done for a yearly basis. Now if you are doing it for a monthly basis or on a quarterly basis, if you want to replicate this entry, right? So every year it is going to be same. In that case, you can simply press Alt 2, it will duplicate, right? And then you can able to change the date. Let's change this yearly depreciation into a monthly depreciation. I'm dividing the yearly values with the full month. So we are getting the now this is the depreciation for December. Now if we are doing monthly depreciation, it is going to be same for that specific year, right? So in that case, I'm going to do Alt 2, right? And then put for, let's say, November. Let's see. So we can see here it is for November. If I want to do for, let's say, October, now it's for October. So Alt 2 is the key, duplicate. So that will automatically duplicate the same entry. All we have to do is just change the date, and then it will create the additional entry. So you can make one entry and then you can press Alt 2 to duplicate for the successive month, right? So this is how you can treat, you can do manual depreciation entry in Tally, right? Once again, I will just pause for a minute. If you have any questions, use the Q&A as well as the chat to ask your questions. Thank you. Okay. Now moving forward to the auto depreciation part. So in the auto depreciation part, the key difference that you will see is that we have a menu for fixed asset. So this menu will come as a part of fixed asset module. So here you can able to create any fixed asset, right? And you can able to define the percentages and then what is the depreciation ledger and then the location as well. And you can able to maintain the details of original purchase invoices and all those cases as well. So here you can able to maintain these assets with the details of acquisition date as well as the purchase invoice value and the purchase invoice details as well. Now, once we have the asset, we have this fixed asset register. So we saw what we saw before was fixed asset analysis, which is part of default tally. This one is a fixed asset register. This is a part of the fixed asset module. Now here, if you see, I have two assets. One is called motor vehicle. The other one is called generator. Here I can able to see my purchase invoice number. So here we can able to see the location name and then the acquisition cost. Acquisition cost would be how much we purchased, and then the net book value, depreciation rate. And then here we can see so far what we have as the accumulated depreciation so far and the depreciation amount for current year. So based on the depreciation percentage for that current year, how much is the total depreciation that we should have. This fixed asset model that you are seeing now, I have configured it as for a quarterly. So here you can see depreciation for Jan to March, depreciation for April to June, depreciation for July to September, and depreciation for October to December. Now here also you can see what is the expected depreciation for first quarter, second quarter, third quarter, and fourth quarter. Now what I have to do is, once I'm ready to pass the depreciation entry, I will come to this fixed asset register, select the asset that I want to make that entry, and then click here Auto JV. Now it will make that entry automatically. Now if I go to this here, we can see now there is an actual entry which is matching with the depreciation expected value. Now if I go to display, accounts book, ledger, here we can see the depreciation entry that automatically got made through the fixed asset module. Now in trial balance also we will see now. So this is the depreciation that came automatically as a result of the fixed asset module. So excuse me, sorry. So this is how you can able to automatically run the depreciation. So for example purpose, I have kept it simple as two asset only. So we can able to have any number of asset included in the fixed asset register, and then we can able to run the depreciation as well. For any of you having asset already, if you want to switch to this automatic depreciation module, you can able to transfer the value. So if you see here, this is the old asset I had, which I have transferred from the old asset to the new asset, and then that asset is specifically configured in the fixed asset register. We can able to transfer the value as well. Once we have done that, we will configure the depreciation percentage, and then month on month or quarterly as well as half yearly or yearly, we can able to run the automated depreciation. So for anybody who's running depreciation on a yearly basis, I don't recommend having automated module because it can be done with a single entry. Again, if you have a very large number of assets and you are running on a yearly basis, in that case also the fixed asset automatic depreciation module will come in handy, right? So this is how the fixed asset automated depreciation module will help you in terms of depreciating and making sure that you enter these entries on a periodic time, right? Now we'll go back to the slide. Yeah. So before going forward, we'll just let us introduce ourselves I'm working as a senior ERP consultant with Maas Financial Consultancy. We are a certified Tally partner, and all of us working in Maas Financial Consultancy are certified Tally as well as accounting professionals. So our background is from finance, so we can able to understand your business process and help you and consult on any business process or any business problems you have. And last year, we have been awarded as the Excellence Champions by Tally Solutions for continuous support of our customers. We are in Dammam as well as in Riyadh. We have a expanding team. So any kind of requirements you have in Tally, you can always feel free to reach out to us. Now we'll go on to the question section. So yeah, so far there is no question. We have one question from Abdul Salim. What is amortization and how it is recorded? So amortization is generally used for any intangible assets. If you have like a goodwill or any patent or know-how or something like that, that is normally the value is deducted through the process of amortization. It's basically depreciation only. But for any asset that you can't see, we use the term amortization. But basically, it is depreciation only. For example, as I said before, if you have, let's say, goodwill is something that a lot of people heard. Like goodwill is normally a tangible asset, and the process of writing it off is amortization. And we have one more question. Suppose I have 60 fixed asset, then what will be the better way to depreciate monthly and quarterly? Okay. So the period is entirely depends on your wish to see periodic P&L. If I want to see monthly exactly what is my profit, then I should recommend you make depreciation on a monthly basis. If you are seeing the profit and loss on a quarterly basis only, then you can do quarterly, right? If you are concerned yourself with only on a quarterly yearly basis, then you can do on a yearly basis. Yeah. So regardless of number of asset, depends on your wish to see accurate P&L on a specific period. So that is how you can determine whether you want to depreciate monthly or quarterly. Good questions. Any other questions? Okay. I think there is no other questions. I appreciate everyone for joining us today with the webinar. And if there is any questions or doubts, you have our numbers, myself and Mr. Alam's numbers. I hope you have. You can reach out to us in terms of any questions on this specific matter. Thank you once again, and see you on the next one. Thank you.